Good morning everyone, and welcome to the PivotBoss pre-market video for July 2nd, 2018. I am Frank Ochoa, aka PivotBoss. Happy Monday everyone, and welcome to the new month of trading for July. We are heading into the 4th of July holiday. Tomorrow closes early. Wednesday, it is a market holiday in the United States. And then we come back Thursday and Friday with crude oil inventories, NFP report, those types of things later on in the week. But it could be a very quiet start to the week or quiet middle portion of the week. We'll see how it continues to play out. But for the most part, here's a look at the ES. It is right back at 2,700. Again, that's been our sticky level for a very long time. Ever since it was February 6th. February 6th was the day when we put in that low right there. We knew that 2703.75 was now going to be the key level to reach, and also was going to be the magnet for a while. And on this rejection, we've gotten back to it every single time we've come back to this level. We continue to be very sticky around it. So right now we're back at the level, and once we're at that level again, it's not easy. We don't have an edge here at this zone. The better plays are at the extremes of this range. And that's what I mentioned here. I mentioned, here it could be a little tricky, but eventually we'll get a move. And if we get a move up here, it could be a fade back to it. And so we've seen that kind of play out here. So again, as we head into the holiday shortened week, we are heading into this level here where it's right in the middle of that range, right in the middle of a holiday coming up. So it could be an area to just have a little bit of caution, be a little bit more reserved with your level of risk in this zone, because again, not a lot of edge here. Now if this level gives way, if 2700, if we break below that zone and close below it, it starts to open up clear air back toward 2600 over time. If we can continue to see strength off this level, then we could get a retest back at 2790. So again, are we headed back to this zone, or are we coming back down here right at the middle right now? And we could see a little bit more chop in this area before that direction is established, and that chop could be seen this week. Okay, let's take a look now at the NQ. Here's a look at the NQ. You can see right here that for the most part, prices pulled back after failing to hold the 72.14 half. Big drop back down. Again, what I mentioned before was if price were to bounce back up to this zone and fail to reestablish soon, that could mean a wider pullback into 66.53. That was the goal the entire time as we were rallying toward that high. I mentioned let this thing go there. I said usually you're not going to hit it and just drop right away. Sometimes you can, but most times, given the distance here that it needs to drive, it needs to gas the tank up. It needs to get some folks too long, and then it needs to start this thing back down. So again, are we in an uptrending market here where we're about to see another cycle high? Or is this thing going to fail around 72.14 half and bring us back toward the center of the key range? So right now that's going to be a question we got to continue to watch for. Really it's that 69.65 FOMC key level that's been support. Failure to hold that level, taking it offered, will open up the next one down, which is between 66.53 and 66.86. Holding this level could get us bouncing, but again, keep an eye on 72.14 half. Alright, let's take a look now at crude. Here's a look at crude oil. This one's been on a tear to the upside. We talked about the potential for explosive breakout right in this zone, and we got that and then some. Completely surpassed what our expectations were here. We were looking for a move as high as 70.78 right here, and then perhaps maybe a little bit more, but this thing has completely shot higher. It's reached it's finally coming into that 74.52 longer term target. I think it got within perhaps 6 ticks of that zone or something on Friday. But for the most part, we're starting the day here with a failed new low. Bulls are trying to keep this area bid right now for a continuation. My thoughts right now is the intensity of the recent trend is very strong, and usually when that's the case, you may see some sideways action as it at least tries to digest that recent move before the next continuation perhaps. So right now, keeping an eye on this level here. Overall, any pullback into 70 could still be a great buying opportunity for a continuation. This thing remains very bullish and is very difficult to sell it at this time. All right, let's take a look now at the YM. Here's a look at the YM. This one right here has been trending downward. Again, this one's been a leader in terms of forecasting downward selling pressure. It was showing us weakness right here on the FOMC key level on June 13th. It was retested and offered on the 14th, and then we've been down ever since and reached the 24K level, which was our early target to the downside to reach, followed by the potential to see a move all the way across the range into 23,348 to 23.5. So we could have a little bit more downside here. You can see how every pullback into the trigger zone has been defended so far. So the 8-period average continues to be resistance. We are holding near these lows. So short term, again, pushing back above the recent highs here could pull back price into the equilibrium point of the key range here, the midpoint, 24,886. Staying below those levels suggests more downside. So that's the break point. Right now, bears have upper hand, and they're trying to chisel through 24K. Again, those are just some of the key levels to watch. But as we head into the holiday shortened week, this range could continue to just trade within these two key levels here. All right, taking a look now, lastly at Bitcoin. XBT up big today, up 7%. You can see the downward trending action, though. So if you just look from basically the beginning of May to recent price action, this is just, while it's up 7%, this thing is bouncing and gapping up here right into the trigger zone of the downward trending market here, right? That trigger zone has been a selling opportunity every time. We're there again. And so remember, once we broke 6K, 6,500, that zone here, once we broke that area, it was a very important zone now to watch for maybe any kind of pullback or retest. This is the pullback into that zone. And if there's a failure here to get back above 6,500 or 6,700, it could slam down another turn, and the next slam could take us easily into 5K. So, you know, turning down another leg could get us 5K to 5250. Pushing back above 6,700 would be significant. If the market can get above 6,700, or more specifically the 7K level with a great LVN here, that would open up a move again back toward these recent highs. But until then, right now we're below this zone. We could be building energy, but this trigger zone suggests more weakness. So another turn down could be ahead unless this thing can start negotiating back above that 6,700 to 7K level. Alright everyone, that does it for today. Thanks a lot for watching the video. Again, please like, share, and subscribe, and I will see you all soon. Take care, folks.